5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to this very special episode of the Follow the Money podcast. As you heard, my name is Jerry Robinson. I'm an economist, an investor, author of the book Bankruptcy of Our Nation, and the founder here at followthemoney.com, where we teach folks how to invest and trade more profitably. Well, welcome to the show, and I tell you what, as you can see from today's episode title, The Gold and Silver Boom of 2025, what a year it's been for precious metals. Gold just punched through another all-time high as I record this on the 3rd of September. We saw gold get above $3,600 today for the first time ever, for the first time in history. Really quite something. Silver also broke out above the $40 level just recently and hit a fresh 14-year high, even getting above $42 during the day today, during intraday trading. And then platinum, which had been consolidating quietly for just a few weeks after a nice breakout, also resumed its move higher. It's been breaking out this week. And then, of course, the miners, the gold miners ETF, GDX, is almost up 100% this year. The silver miners ETF is up close to 90%. And at the start of the year, we put out our market outlook that you may recall. We actually did an episode where we highlighted that market outlook for 2025. And we said that we expected 2025 to be a big year for precious metals, gold and silver and platinum in particular. And here we are in September, and the rally that we talked about is fully underway. And on top of that, we have a dollar that's weakening. We have a Fed that's signaling cuts this month. We have global demand for real, tangible stores of value growing. So today's episode is really all about making sense of this moment. In our first segment, we're going to break down the drivers behind this powerful rally in gold, silver, platinum, and what it could mean for the months ahead. And then in segment 2, we're going to walk through some of the charts that I've been watching, give you my take on some of the broader markets. I'll provide my market commentary on the S&P 500, the US dollar, Bitcoin, many other things. And then in our third and final segment, I'll just share some final thoughts on what this metals boom is really telling us about where we are in the global economy and why this story, I think, is far from over. So sit back, get ready to enjoy. Let's dive right in to today's very special episode. All right, let's talk about what's happening in the precious metals market right now, because it really is nothing short of extraordinary. Here we are in 2025, and as I mentioned, physical gold has broken through $3,600 an ounce for the first time ever. This, of course, is happening in the face of a weakening dollar. We're also seeing expectations of multiple Fed rate cuts coming in the coming months. We also have a surge in global demand for the metals, obviously due to all kinds of extenuating factors. You've got silver finally clearing that very stubborn $40 resistance level. It just happened over the weekend, and then it got close to 42 today. Platinum, which has been consolidating, now breaking out of that range and catching a bid this week. And of course, these moves didn't come out of nowhere, right? We've been talking for months about metals and how they have been outperforming in 2025. So it's really no surprise, but I want to break down some of the key drivers so you kind of understand how we're viewing this. You know, gold in its rally has really been driven by several converging forces. So you have, first of all, the dollar, right? The dollar is weakening. And as the greenback goes down in value, gold becomes cheaper in other currencies, and that tends to boost demand globally for gold, right? We also have those rate cuts from the Fed that are on the horizon. The Fed has been signaling that it's obviously done hiking. It's already made that very clear several months ago, but the futures market now pricing in cuts as early as this month. We have a FOMC meeting coming up on the 17th of September. At that meeting, the expectation is pretty much a foregone conclusion that the Federal Reserve Open Market Committee is going to cut rates, likely by a 25 basis point cut, maybe a 50 basis point cut. I don't necessarily see that in the cards, although more incoming data may cause that to happen. But we're still expecting a 25 basis point rate cut for now. So you have the dollar weakening, you have rate cuts on the horizon, which are obviously contributing to that weakening dollar. Let's not forget also that you have central banks that are buying, right? So we're seeing strong, steady buying from emerging market central banks. We've been seeing that all year, particularly in Asia, as they diversify their reserves and hedge against currency and geopolitical risk. We've also seen a very strong inflow into gold ETFs this year, especially when we look back at the first half of the year. There were some really strong inflows into gold exchange-traded products. So we've definitely been seeing that. Also, don't forget that we just learned from a federal court, an appeals court, that the Trump tariff strategy has been deemed unconstitutional, has been deemed illegal. And that is, of course, upending the global economy as well. It's kind of causing many of our trading partners to be confused as they're not sure. Do they owe the tariffs? They have to keep paying these tariffs. In fact, one of the biggest concerns right now for the White House is the fact that if it is indeed true that Trump will not be able to keep these tariffs in play, and we'll know that after a review by the Supreme Court. Now, Trump demanding an emergency Supreme Court intervention in this tariff decision, which is, the appeals court ruling his tariffs illegal, unconstitutional, saying that he doesn't have the power to do this. And so the bigger question becomes, will the Trump administration be required to refund the importers who have already paid these existing tariffs, which have been now deemed by the United States judicial system to be illegal, right, to be unconstitutional. So we have that, which is weighing on the markets, as you can imagine. That's causing all kinds of uncertainty. We also have concerns about the Federal Reserve. You know that President Trump recently announced that he was firing a Fed governor, Lisa Cook, who is the first and only black woman to sit on the Fed board of governors. And there's a court case that's going to be going before the courts very soon that's going to give us more information about whether this will actually hold. But the whole point of that is that all of this is shaking confidence in the Federal Reserve independence, right? And that's a very important piece of the puzzle when you're looking at it from a foreign investor viewpoint. So investors are moving into gold as a safe haven in response to these perceived risks to monetary stability, right? So you've got that. You've got, of course, all the geopolitical uncertainty as well. We still have several theaters of war around the world. So you have all this Fed rate drama. You've got a weakening dollar. You've got anxiety at the institutional levels. You've got really solid demand for gold ETFs and physical gold through central banks. And then there's just a lot of global angst, right? Trade wars, flare-ups around the world. They're all feeding into gold's traditional role as a store of value. Gold really tends to shine when the world feels unstable, which is exactly what we're seeing. Now, I have been talking to our members now for some time about how gold, which, by the way, has already surpassed my 2025 price target. And I've been telling our members here that the price of gold is not only historically high, but also if you look at it technically on the charts, you'll discover that gold has never been here before in terms of at least we go back for the last 50 years and look at the data. We've never seen this kind of move on the monthly chart for gold in terms of its relative strength. So gold is literally in no man's land right now when it comes to the technicals, for those who follow technicals. From my perspective, that means that there's more upside ahead for silver and platinum than there is for gold. And I think that makes sense. We've even begun to see that now. Year to date, for much of this year, we saw gold leading silver. Now we're beginning to see that switch. Over the last couple of weeks, we've begun to see silver overtake gold in terms of gains year to date, signaling to us that we're about to see that typical switch that occurs. Gold tends to lead the rally in precious metals, but then it only goes so far before silver and often platinum begin to play catch up, and then they begin to move even quicker. And I think that's about where we are right now in the cycle. So we are expecting more upside ahead for the metals. I would say out of all of the metals we're talking about today, gold has the least amount of upside left in this rally. But I still think that gold miners still have plenty of upside ahead. We'll talk about miners in a minute. Let's move on to silver. I want to talk about gold, silver, platinum, and then we'll get into miners before we wrap up this segment. So silver also breaking out. It's been building for a while, but the surge we've seen over the last few days has really been impressive. What's driving silver? Well, silver has a dual-pronged demand, right? So it's not just a safe haven like gold. It's also a very critical industrial input. So things like solar panels, electric vehicles, electronics, AI devices, all of these things require silver. And so as those industries expand, demand for silver obviously is growing. And it's not just here in the United States. Of course, you go to Asia, you'll see, growing demand for electric vehicles, swelling demand for solar panels. And so just because here in the United States, we are not emphasizing solar at this time during this presidency, other nations are. Other nations are moving ahead with renewable energy, and that requires silver as an input. Of course, the markets are pricing in those Fed rate cuts likely this month, highly likely this month, which obviously weakens that dollar and lowers the opportunity cost of holding a non-yielding asset like silver, right? So that also is fueling the rally. And don't forget that at the same time, the supply of silver remains constrained. Silver has been in a multi-year supply deficit. Forecasts projecting now a fifth straight year of deficits, which tightens the market and really lays the groundwork for even higher prices. You look at silver mine production, really hasn't kept pace with the industrial and investment demand that's out there globally. And so that persistent deficit is definitely tightening the market. And then, of course, there's the psychology of the breakout. You see, silver really hasn't got a lot of love this year. It's mainly been gold that's been catching the attention. And even gold was, not really being paid much attention to until recently. So from my perspective, there's still a lot of people who haven't even understood what's happening in the space right now that are going to get clued into it, see it in the media, see it in the news, see it on social media, whatever, and then begin to jump aboard. I would imagine most of them are going to move toward the mining stocks. So we'll talk about those in a minute. But, we have the psychology here of this breakout. Once silver crossed above that $40 line, it really triggered a wave of momentum buying. We saw that immediately right after silver crossed above $40. So investors who've been sitting on the sidelines saying, well, silver is probably not going to do anything this year. Well, they saw it move above 40, and now many people are getting off of the sideline, and they're starting to pile in. That's what's adding fuel to the fire. So silver, certainly a sleeper that is awakening. And then we have platinum, the other silver metal, which is much more scarce than gold, obviously more scarce than silver. It's a much smaller market, but it's no less interesting. In fact, it spent many, many years, quite frankly, consolidating, building a massive base. And it began to break out earlier this year. And I began telling our members, in fact, I even started buying platinum as soon as the breakout happened. That was a few months ago. Now we've seen platinum move pretty nicely. And then it pulled back in the month of August and just spent some time consolidating. And now this week, it's beginning to break out from that consolidation once again. So it's now in breakout mode. And what is what's platinum got going for it? Well, it's got a very scarce supply, strong industrial demand, particularly in the auto sector, and that's picking up. And then supplies are constrained in key producing countries like South Africa. Platinum could see a sharp move higher if these demand trends continue amid this constrained supply. So we're bullish on gold, silver, and platinum in 2025. We began the year saying that we expected them to outperform the market this year. Here we are in September. That has happened. And now, as we move into the final parts of the year, from my perspective, if you're looking for the most alpha from these moves in terms of these three metals, I would suggest to you that silver and platinum will be the two biggest winners from here to the end of the year versus gold. I still think gold probably has a bit more upside left. However, as I had mentioned to you, technically speaking, on the long-term charts, it really is in a place that is wildly due for a pullback. Now, that brings me to the miners, where we have really been seeing some big moves in the miners. One of the easiest ways, and I talked about these some of these ETFs even in my book, Bankruptcy of Our Nation, that was put out many years ago. When you look at the miners, the leverage to the metals is playing out exactly as you would expect in a bull market. There is the GDX ETF. GDX is the VanEck Gold Miners ETF. It's one of the largest, certainly a very popular ETF with nearly 20 million shares traded every single day. If you look at the GDX ETF, you will see that it's up 93% year to date. So since the beginning of this year until now, just 2025 so far, it's up 93%. That, by the way, tracks the major gold miners. And then we also have another ETF that we like to track, which is the GDXJ. And what this one is this is the VanEck Junior Gold Miners, which really focuses upon these smaller miners. And if you look at that particular ETF, it's up 97% year to date. So that's really been something to see. Then on the silver side, you have SIL. SIL is the Global X Silver Miners ETF. That particular ETF up 92% year to date. So that is another big rally. And then the other ETF that we track in this space covering these miners would be the Amplified Junior Silver Miners ETF, SILJ. That one is up 90%. So all of these four ETFs up 90% or more year to date. And so that's what we mean when we talk about the leverage of miners to the underlying metals. I mean, when gold goes up, say 10%, a quality miner can move 2 or 3 times that amount because the operating leverage built into their business models. Now, it doesn't mean that they're going to, but if they're high quality, they can. Now, here at followthemoney.com, we have something known as our proprietary Smart Score stock market ranking system. And this is one of the most powerful things we offer to our premium members, where they're able to log in to our website and then look at different types of stocks based upon our proprietary fundamental ranking. So if you look at our top ranked gold mining stocks, and we have several different stocks we track: gold mining, silver mining, uranium mining, cannabis, solar energy, water stocks, agricultural stocks, momentum stocks, China stocks, Canadian stocks, real estate stocks, all kinds of different stocks. We rank the whole NASDAQ 100. We rank the whole Dow 30. And so, all of it, we track blockchain stocks, Indian stocks, just on and on and on and on, solar energy. But anyway, you can log in as a member and see all of those, and then you can see them ranked, right? So we have a price target and the whole 9 yards. So right now, our top ranked gold mining stock, which has been there pretty much all year long, is Newmont. Newmont, which is up 98% year to date. So it's up more than all of those ETFs we were talking about And it is also at the same time the world's largest gold miner, right? And it continues to see steady gains as it benefits from the strong production and very disciplined cost management this year. We have to say that. They really have shown some discipline in terms of costs and spending. Another gold miner that we like is Agnico Eagle Mines. That's AEM. That's the number 2 ranked Smart Score stock, has been for most of the year. That one's up nearly 80% year to date, continues to execute well, continues to reward shareholders. Now, we have about 18 stocks on the gold mining list that have actually made the cut. And so obviously our members can log in, just go to followthemoney.com/SmartScore, and then just click on the gold mining stocks, and you'll see all 18 stocks ranked in order, along with our price target and all of that. Now, turning to the silver mining space, on the silver side, there's a couple of stocks that are near the top of our Smart Score rankings. The number 1 ranked stock right now in silver, in the silver mining space, is MAG Silver. MAG is the ticker. That one right now up 84% year to date. We've seen some really good moves there. That's followed by Hecla Mining, ticker symbol HL. That's the number 2 silver mining stock, according to our Smart Score ranking system. That one's up 65%. There's many others, right? You can log in and see all of those if you're a member out there. We also like Wheaton Precious Metals. We like Franco-Nevada. We like Pan American Silver. There's quite a few names that we like in this environment. But our system is telling us which ones we should be focused on right now. And so the Smart Score system really helping us out this year in terms of tracking those profitable moves in gold and silver miners. So these are companies with solid balance sheets and proven reserves and strong cash flow profiles. And in this rising metals market where we see higher prices, they just tend to lead. In fact, right now, looking at our ETF leaderboard, GDX, GDXJ, SIL, SILJ, those 4 ETFs I talked about earlier, they're the 4 top performing ETFs in our entire ETF leaderboard year to date. So they're leading every other ETF that we track, which is just simply amazing when you think about it, because gold and silver tend to be overlooked on Wall Street. It's not really something that gets a lot of attention. So there's obviously a deeper story here too, just beyond the rates, just beyond the moving dollar. I mean, we have de-dollarization still happening. More countries are exploring trade settlement outside of the US dollar. That's boosting the appeal of gold and increasingly silver as a neutral asset, if you will. We saw that recently with the SEO summit held in China over the weekend, where India and China and Russia and many other countries, Turkey, came together and united in terms of certain types of policies. But obviously, the one thing that they are united in against is the Western arrogance that, as they see it, and of course that hurts our economy. We also have, fiscal realities that are just biting. It seems like everybody now is waking up to the reality that we have a massive, $37 trillion national debt, got deficits that are out of control, got, politicians, spending like drunken sailors in 2025. And investors are just, smart. They're looking for ways to protect their purchasing power. Who can blame them? And then, of course, technology is shifting demand. The electrification of everything and transportation and infrastructure, everything is being, we're moving into this AI world, this AI revolution. It's creating structural demand for metals that's unlikely to reverse anytime soon. And then, as we talked about before, let's not forget that psychological element. So as the price goes up, it tends to attract more investors, right? And traders, as they wake up to the idea that, here's something that's on the move. And they began to hold some tangible assets, or they began to try to get exposure to the miners that, mine those tangible assets. Obviously, it makes sense in a world of policy uncertainty and incredible currency risk where we are here in 2025. So from where I sit, the setup remains favorable in gold, in silver, in platinum, but again, more so in silver and platinum, and certainly in the miners. Because even if gold backs off here a bit from its current price of 3,600 or so, then the miners are still going to be making good money. I mean, the price would have to fall pretty hard for, the miners to no longer be making money. Many of the miners have all-in sustaining costs of, $1,400 or so per ounce. So if gold's $3,600 per ounce, and your all-in sustaining costs are somewhere between $1,400 and $1,800, well, you should be making good money from every ounce that you mine. So obviously, in this environment, though, we're seeing the dollar looks soft, the Fed signaling a pivot. We have central banks that are still buying, got industrial demand for silver and platinum growing. And that combo just suggests that this metals bull run isn't finished. Could we see gold at 4,000 by year end? I won't say that it's completely out of the question, but I think it's less likely that we'll see that than we will see silver push past 45, maybe even hitting a new all-time high this year. But silver's already blown past my 2025 price target. We've already seen it blow right past it. So it could even go much higher. So nobody knows where this thing is going to end or when it will end, right? It's absolutely possible to see these prices move higher and maybe even higher than we had expected. So if you want to follow along and see our Smart Score rankings of the top gold and silver mining stocks, or many other types of stocks for that matter, you can find all of that on our website at followthemoney.com. We update those rankings every single week to help you identify the strongest names in various industries and then to keep track of new opportunities as the rally unfolds. And that's the lay of the land in the precious metals market as we head into the final stretch of 2025. It's really been an incredible ride so far this year. And in my view, the story isn't over yet. So my advice to you out there as you watch this current market is to stay disciplined, stay informed. Don't let the noise shake you out of your strategy here as we head in to the final months of 2025.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, so let's take a look at the rest of the markets. I hope you enjoyed that overview of the gold, silver, and platinum complex, the precious metals space. We also talked about some miners that we like in that space, but of course, they've already had a huge run. I think there's still more upside ahead. But let's move on now to the S&P 500 index. We know this is the most important index for the United States investor, and when investors from abroad look at the United States, the S&P is really probably the best overall barometer of what's happening in the equities market. Well, right now, we look at the S&P 500. It is still sitting above a rising 50-day moving average and a rising 200-day moving average. It broke out after its April 7th low at around 4,800 or so. It broke out above its 200-day moving average in May, and typically you'll see it pull back to a rising 50-day moving average a few times during that rally. Well, so far, we have yet to touch that 50-day moving average. So it broke out in May, all of June, all of July, all of August. And here we are in September, and we have yet to pull back to the 50-day moving average, indicating to us that there is a lot of strength. In fact, this is one of the strongest rallies over a period of 100 days that we have seen. Some are saying it's one of the biggest and strongest rallies that we have seen. So when we look at the data here, we clearly see that we're locked in an uptrend. We are appearing to have a little bit of resistance now around the 6,500 level on the S&P 500. We'll see if we can overcome that in the coming weeks. Obviously, we're moving into the month of September, and that is the weakest month of the year historically for the S&P 500 and for the broader U.S. market. It tends to be down about 1.2% on average, going back to, say, 1927 or so. So this is the month you will tend to get a move down. It doesn't mean that it will happen. Those historical tendencies are not guaranteed to happen just because they have in the past. But just understanding that September is probably going to be filled with a few, landmines along the way that could deliver some volatility. In fact, I just spent some time going over that with our members on our live Trends and Profits webcast that I do every Tuesday morning at 10 o'clock Central Time. And then we archive it on our website. So there's hundreds, if not thousands of hours available for our members to go and learn about investing and making money online, making money in real estate, making money from trading stocks and trading ETFs, or making money in crypto. All of that on our website. But we just spent some time going over the month of September. I shared why it's my favorite month to dollar cost average. I like seeing the volatility. As a longer term investor, I want to see lower prices that I can buy at. So we may have some good opportunities here in the month of September. We'll be keeping our eyes open, but just realize that we could see some pullback this month, and it would not be at all unusual, historically speaking. Now, when we look at the percentage of stocks in the S&P that are trading above their 200-day moving average, it's at 64%. So that means, again, roughly 2 out of 3 stocks are trading above their 200-day moving average. That's not extreme at all. That's not a number we would say, okay, it sounds like we've definitely peaked. In fact, we can go much, much, much higher than that. Typically, when we get above 80 on that particular metric, 80% of stocks trading above their 200-day moving average will tend to start taking a little cream off the top, right? At that point, you probably want to pump the brakes a little, because that's when you tend to get, some weakness to come back in. If we take a look at the NASDAQ 100, we did get a pullback to the 50-day moving average on Monday, or Tuesday, I should say, of this week. The markets were closed Monday for Labor Day. But on Tuesday, we did get a pullback to the 50-day moving average. And then we got a bounce from that area into Wednesday's trade. So that was the very first touch of the 50-day moving average since the May breakout for QQQ. That may be what we needed to move higher in terms of the NASDAQ 100. So we'll be watching that market, of course. As we already talked about, gold on a tear here, really moving higher. The gold-silver ratio, which we didn't talk about, currently 86, which is still very bullish for silver. And so gold just continuing to power higher. The U.S. dollar also struggling as it continues to trade around its falling 50-day moving average. We've really seen a downdraft in the dollar. The dollar is down 7 or 8% year to date. And of course, that's to be expected with the expectation of rate cuts. That's certainly going to put downward pressure on the U.S. dollar. So the U.S. dollar here kind of struggling above, we would say, probably 96, 96.50 support, but it's also struggling below the 100 to 101 resistance level that is really hampering it. Another market that I want to briefly talk about is China. That's a market that most people are not paying attention to. The S&P China ETF, ticker symbol GXC, not one that we trade. It's way too thinly traded in terms of volume, but it's an excellent proxy and a helpful metric for tracking nearly 1,200 of the most important and liquid publicly traded Chinese equities. And if we look at it, we see that it's up almost as much as gold is this year. It's up more than 30% year to date. And of course, you compare that to the S&P, which is up, say, 10 or 11% year to date. So that particular S&P China ETF, beating the S&P 500 by a factor of 3, like a 3x or so. So there's been a real stealth rally in Chinese stocks. One of the leading stocks this year in China has been Alibaba, which is, by the way, our number one ranked smart score stock for the month of September in China. We've also seen some really big moves in Tencent Music, ticker symbol TME. That's up 122% this year. We've also seen some other big moves in other names. One of the ones that we've been doing quite a few trading ideas on is A2 Lifestyle Holdings, ticker symbol ATAT. That one's up nearly 50% this year. So we've seen quite a bit of movement there in the Chinese market, and it's still, I would say, probably warming up. And then let me also briefly talk about Bitcoin and Ethereum before we close out this segment. This is a little briefer segment. I just wanted to cover those other markets that we didn't talk about. So Bitcoin currently, as we sit right now, trading at about 112,500 roughly. So it's sitting below that 124,000 recent all-time high that was hit not too long ago. It's still consolidating below a 50-day moving average, but sitting above its 200-day moving average. Volume staying pretty solid right now. And overall, one of the key ratios that I watch on this space is the Bitcoin to S&P 500 ratio. As long as that ratio is above 15.5, then I would say that we are strongly in a bull market. Right now, it's sitting at 17.5. So we are certainly above that level. Our members know that level because I put out a chart on that level every single weekend, so they're able to see it and monitor it. These are really important metrics that we follow, and I'm very grateful to be able to share them with you here on this broadcast. Also, Ethereum, which remains locked in a massive uptrend, pulled back from a near touch of 5,000 just a couple of weeks ago, now falling all the way down to near 4,200. And now as we speak, it's kind of come back up to around the 4,500 level. I suspect that we will see Ethereum smash past that $5,000 level. We are very bullish on Ethereum and Bitcoin heading into the remainder of the year. We do think we could see a lot of movement. That's especially true when we get to October. I guess next month already. It's already October's next month. And in that month, we are expecting very possibly that we're going to get that market structure bill passed in terms of giving us much more clarity on the future of digital assets here in the United States. I would be watching very closely the $4,000 level on Ethereum. I think that area is going to hold. That is an important area of support. Obviously, the overhead resistance is at 5,000. So that's the area that's going to prove to be pretty tough to overcome. So we'll see how all that works out. We track many different cryptocurrencies. We've been investing in cryptocurrency for well over a decade, and we've been talking to our members about it, keeping them updated, shepherding them through different kinds of market environments, and delivering them excellent insights, market insights, charts, commentary, and even trading ideas, and then our own investments that we make. We share that with our members. And so all of that you can find on our website, followthemoney.com. Our members can, right now, they can go to our website, followthemoney.com/charts, and see all the charts I just talked about, and many, many others, including many other cryptocurrencies and other indices and other commodities, all there at followthemoney.com/charts. All right, friends, welcome back to the final moments of today's broadcast. It's been great to be here with you today. And as we wrap up today's episode, I want to leave you with a couple of thoughts that I think really capture the moment that we're in. I was reminded of a quote by J.P. Morgan, who once said, "Gold is money and everything else is credit." We've mentioned that quote before on our broadcast. And back in 1966, I was also reminded of another quote that we've often talked about long before he ever sat on the Federal Reserve and became the chairman of the Fed. Alan Greenspan wrote this. He said, "In the absence of the gold standard, there is no way to protect savings from confiscation through inflation." Isn't that something? This was an actual Federal Reserve chair who eventually was going to become that, Federal Reserve chair, writing about this, already knowing this as an economist, right? So those words were true then, and they're certainly true now. What we're seeing today in 2025 is these metals rally, showing us that it's really not just about price action or the short-term gains that we're looking at here in 2025. Obviously, that's the benefit to us as investors and as traders. But what we're really dealing with here is a lack of trust, right? We're dealing with a lack of confidence in the financial system. It's about what investors and central banks and even everyday people around the world are beginning to realize, that holding something tangible, a real hard asset, something outside of the system, something outside of the promises of governments and central banks, is just smart stewardship. That's the whole reason that we were attracted to Bitcoin well over a decade ago when we began talking about it on this broadcast. So not only is gold attractive in this environment, digital gold, that is Bitcoin, also attractive in this environment. So we have the dollar weakening, we have rate cuts ahead, we have fiscal discipline in Washington nowhere to be found, right? And in that kind of environment, people turn to gold as a form of insurance. To me, gold is not really an investment as much as it is a form of portfolio insurance. That's really what it's always been, in my view, and it serves as a hedge against currency debasement. So, there's a purpose and a reason why we've taught you for years to keep a portion of your wealth in something that has stood the test of time, like gold. I think it's a very important idea. And now anybody who has ever bought gold at any point over the last 15 years or more is in the black. It's just simply incredible that we now with gold at brand new all-time highs. Now, what I don't want you to hear me say in this broadcast is that I think it's time for you to sell everything and buy gold, right? I would never do that with anything, right? I think the whole strategy here to move forward is to be nimble in this kind of environment where you want to have a strongly diversified portfolio. So that's never been my message, is to go all in on anything or on one thing. But I am saying this: make sure that you understand the role that these metals can play in a well thought out financial plan. Make sure that you're not ignoring an asset class that is obviously screaming at us right now, the kind of world that we're living in. So this is a season where discipline matters more than ever. So I don't want you to get caught up in chasing headlines. I encourage you to stick with your strategy, know what you own, and know why you own it. And that's just something to think about. I hope this episode has been very helpful and instructive to you. If you have any questions you'd like to ask us, feel free to reach out to us. We're always available at our website, followthemoney.com. We're also on social media. You can look us up on x.com at FTM Daily. Give us a follow there if you're not currently following us. FTM, like Follow the Money Daily. Also the same thing on Facebook. It's facebook.com/FTM Daily. And of course, our members can always hop on our website, followthemoney.com, get logged in, check out our latest charts, our smart score rankings, our latest swing trading ideas, position trading ideas, our latest buy alerts, and all of our commentary, always waiting for you right there at followthemoney.com. Friends, thanks again for taking some time and spending it with me today. Until next time, remember, the trend is your friend, and the goal is financial freedom. We'll see you on the next broadcast. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.